Hey, Valoria, it's Greg. Your question is very deep, going into multiple time frames, support, resistance, moving averages. I mean, all of this is really so detailed to explain. It's a course and that's why courses are created. So you're asking me, how much do I care about the 50 MA for swing and day trading? Well, I don't care about the 50 MA at all for day trading, but I'll explain more in a second. The 50MA is utilized by the majority of institutions and traders on a daily time frame. So for swing trading, it's important. Um, with any moving average, the focus is going to be which way is it pointing? Is it flat? Is it pointing up? Is it pointing down? Is it aligned with support or resistance? I'm showing you a chart here of Johnson and Johnson, and so you go on to ask about the 50MA immediately above and pointing down on the weekly time frame. Well, I don't look at it on a weekly time frame. I'm looking at it only on a daily time frame. So when we look at moving averages, we look at them from the point of view of how they relate to another moving average in a different time frame. I explain this in the courses and in webinars that I do. So the 50MA is roughly equal to the 10MA, very close to the 10MA on the weekly time frame. So when I'm looking at the daily time frame, is telling me, is the weekly time frame, is it sideways? Is it in a downtrend? Is it uptrend? Give me a rough estimate for that. And so you can see the weekly time frame of Johnson & Johnson, it's in a sideways trend. And if I was to put the 10MA on there, it would be right around here. And it's in a trading range. So if I see a buy setup, and this is not a buy setup, and the 50MA is directly above, is it aligned with support or resistance? If it's aligned with price action, I'm not going to want to do that trade. I mean, it would have to be a certain special structure, because if it's lined up with resistance and it doesn't have room to run, and the 50MA is there as well, and others are looking at it, it's assumed that it's going to be difficult to go through it. So this is more of a continuation type of a pattern, but as you can see, the 50MA is lined up with that resistance. I would not do it. And so a lot of patterns look something like this or somewhat similar to it. And when you say similar to the 2-5, 15-minute, and you're relating to the 2 and the 5 working together, or the 5 and the 15 together, or the 15 and the 60 together, again, how to combine multiple time frames together is an in-depth subject. Now, whether I'm looking at those time frames, 2 and 5, if I choose to combine them, or the 5 and 15, or the 15 and then 60, is a choice as to whether I'm going to combine them or not. If I'm looking at all of them, it's going to be quite confusing. So I'm not going to do that. So you can see here, I've got a 5-minute chart. And you'll see I have a 20, a 60, and a 200. Well, why the 60 and not the 50? Well, because if you do the calculation, the 60 is roughly equal to the 20 on the 15-minute. So the same way with the daily and the weekly, when I'm looking at a 5-minute, I can see roughly what the 15-minute is doing. And so what I see here on Goldman Sachs is that it's a bottoming 5-minute chart. It was a downside break and a deep retracement, and it resumed back up. So this has improved from this downtrend, and now the 5 and the 15 are coming together. Now the 200 is roughly equivalent to the 10 on the 60-minute. So in this one time frame, I can see what's happening in multiple time frames. Now, again, I can take all of these moving averages off, and what I see here is that there's the potential for Goldman Sachs to move up toward that pivot area, that dot. Maybe it gets through it. I don't know, but that's the next reference point. And do I want to trade a bottoming pattern versus finding something like this that could be in an uptrend above all of the moving averages? Again, I have to find that particular setup and search for it. But depending on what I choose to look at, I might decide to choose to trade the Qs. And we see a similar bottoming pattern here, but they're in a downtrend on the daily time frame. They look like they're going to test the low. The weekly time frame is trending down. It tested some support area here. Looks like it's going to go lower. In the 5 minute, it's bottoming out. So are we going to be swing traders? If we're swing traders, we're probably not doing anything because this is down near some support. There's a wide range bar. Looks like it's going to test the low. The reward to risk is not to any advantage. If I'm a day trader and I'm looking at a 5 minute chart, the upside potential isn't that great. It's not an excellent pattern. Initially, this was at the end of the day. Maybe it would have been, if this was, say, at 2 o'clock or in the morning, well, then I'd want to consider trading this, even though it's coming out of a bottom. So time of day is important. Multiple time frames is important. How I use moving averages is important. So all of these things that have to be covered in addition to relative strength, relative weakness, possibly what a market internals, what the NYSE tick is doing on an intraday basis. So there are many facets to making a decision to placing a trade. But based on what you're asking me, well, I'm not going to mix swing trading with day trading. And if I'm doing day trading, well, then I'm going to make a decision as to the time frames that I'm going to use. And so if I want to use the 60-minute chart and I see if the Qs were down at this support area and then was forming this type of a pattern, that would be much more advantageous trading setup for looking for a larger move versus happening in the middle of nowhere. So there's a whole thought process that goes on here that's covered in the course and why I call it thought building lessons. So I hope that helps in the short amount of time I make this video, but it's a very in-depth question of putting together all of this information, but it gives you an initial insight as to the thought process behind utilizing moving averages, whether you want to use them as support or resistance. They're good as visual aids, what's happening in trend in multiple time frames, but ultimately it's price action that we trade, support and resistance based on those prices and the direction of them in different time frames. If you have questions, email me.